It was mostly tech that kept the S&P 500 down. Banks were down big time, but they came up. What really held the S&P 500 was the consumer staples, um, a little bit of energy, and we also had what was the other sector? We also had the healthcare sector that did really well. We are just under resistance at 410.32. So, SPY being under resistance at 410.32, we expect further selling to come. We had a Dragonfly Doji reversal back up in today's candle close on the daily chart. I feel like we may even go up as far as 409.50 area, but very likely we'll end up selling back down to first fill the gap at 404.13 and then fill the second gap at 401.36. And I feel like basically from 401 to 395, this is the area that the market will end up bouncing right back up. We are also very far away from the 20 EMA line, which usually doesn't happen. When we do get too far away from the 200 SMA, 20 EMA line, the white 20 EMA line, we always end up correcting back down to it. So that's what I will be watching going forward. I will be anticipating a pullback down to this level here towards the 20 EMA line. So 403 first would be a perfect retest, but the most perfect one will come from 401. We do have two gaps down here, so so far we just need to be aware that the momentum is shifting short term and that we can potentially sell off more, not tomorrow, but going into Monday, Tuesday, and Wednesday of next week. I believe that tomorrow will also be a day where the shorts, tomorrow will also be a day where the spikes will be shorted. This is because if we look at the QQQ sector, the tech sector, it is definitely starting to reverse back down. We established resistance at 320.92, and so far we have been rejecting that line, and we sold off in this double top formation. We are currently trading just under the gap at 312, and then we have another massive gap at 307. So what can happen is we will end up forming a base right over here, forming a base, but what we will end up doing is basically selling right back down to fill the gap. I don't think we will go back up. I think we will see some upside towards like maybe 318 area or something, but we'll very likely sell right back down to fill those gaps down here at 312.76. And even if we don't fill this gap at 307.09, I would observe momentum at 310.83, which was the previous resistance, now turned into support after breakout. So that now that we have broken out on QQQ, I anticipate a potential retest at the breakout at 311.09. And depending on how momentum behaves over there, we will either bounce right back up or we will see a small bounce only to fill the gap down here towards 307.01. That's what I will be watching on QQQ. We are definitely overbought. We are very, very overbought from the 200 SMA line. So our signals tell us to stay away from QQQ longs and focus on shorting the spikes every day until we have a solidified correction back down. Let's take a look at Apple. All right, so here's Apple. Apple as well, very, very overbought. So far, we have a nice consolidation base here. So we're going to draw our consolidation base here, and we're going to say that Apple is in a drop potential. Matter of fact, I'm going to remove this, right? And we're just going to leave Apple as it is. We're going to say that we fired the rising wedge, the bearish rising wedge formation that we were forming. Now that we have fired the rising wedge, what I think can happen is that we get a retest at 164.18 area, followed by a sell-off back down to retest the previous breakout at 160, and only from 160 we will see how the market behaves. We can go as far as retesting 157.36, but our main target for now will be the 160. We can also see that the RSI is very overbought. The TTM squeeze tells us that price action is cooling off and that we can potentially see further selling down to this potential gap fill at 157.98. That's what I will be watching on Apple. First, I would like to see how the 160 behaves, which is about $3.76 away from current pricing. Now let's go take a look at Microsoft. So Microsoft is trading inside of this channel here. We are definitely overbought from the 200 SMA line. So same logic towards this one, same strategy. We're not going to be long on Microsoft until we get a solidified pullback down to at least 276 area. What we are seeing so far is we had this gravestone doji yesterday, which is a bearish reversal candlestick when formed at the top, signifying a reversal, a bearish reversal. Then we had a confirmation day today. We had a confirmation follow through. So far, it closed as an indecisive doji, but it is still bearish because not only did we close below the previous day session, but we also are showing some very, very overbought red engine signals here. So the TTM squeeze is now printing light red bar candles, which signifies a very, very hot TTM squeeze that is in need of cooling off. And the only way to really cool off is either consolidate or sell back down. So to sell back down, we have a few price targets ahead of us. We have the 280.51 gap fill, and do keep in mind, team, that when you have the trend so far away, when you have the 200 SMA line, which is known to be the home base, when it is so far away from price action in majority of cases, over 99, I wouldn't say 99, but over like 90% chance, over 90% chance that you will eventually see a pullback down at least halfway before seeing further highs. So in this case, what we anticipate first is the 280.53 gap fill, and then another gap or the previous breakout here at 276. If we can hold the 276 area, which will be just the 20 EMA line retest as well, if we hold that level of confluence, which is also the bottoming support line of this potential bullish channel, then we will buy the dip here at 276, and we will anticipate further upside to come. But in the meantime, so far we have a double top on the 4-hour time frame, and the double top is going to send us all the way down to 275, which is what we will be watching. So eyes on Microsoft towards 275. We can also say that we are at the top of this rising wedge channel, and that we need a retest at 270 here before seeing further upside to come. In the meantime, though, short term, something is very clear. We have a double top chart pattern, and what we should be watching for is a consolidation here, which will eventually send prices lower down to this gap fill at 280, and then the final gap at 275, which is where we believe tech will be a great dip buy going into the rest of 2023. Now that we have looked into Microsoft, we know that Microsoft is coming down to at least 275, so we're going to go ahead and look at another stock. The next stock we look at is NVDA. NVDA is trading inside of this rising wedge, which is a bearish topping process. And then we have another double top, which is also a bearish topping process. So far into today's session, we did break below the rising wedge support trend line. However, we regained it right back up. And so far, the double top is still in play. The rising wedge is still in play. However, as soon as we break down below the rising wedge, so far the momentum is still stable. However, the moment we break below the rising wedge support line, there's going to be major imbalance to the sell side, and I think this will go down in this beautiful double top pattern where we will break below 259.61, which is also where the 20 EMA line is trading at. And once we break that, we will fill the first gap at 229 and then the second gap at 207. NVIDIA is crazy, 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 insane overbought, you guys. The 200 SMA line is trading at 174, and price action is currently trading at the 270s, which is almost $100 over where it should be trading at, or it should be correcting at. So we won't expect it to go all the way down, but we are going to expect at least 229 in the next 2 to 3 weeks. So NVIDIA in this bearish rising wedge chart pattern, that is also placing another double top formation, which is the double top. Another topping process formation, which is the double top. And once we break below 259.61, we are going to flush with crazy upside momentum. So keep your eyes out on NVIDIA for further selling increase in the coming days. We also had this RSI here. RSI failed to go above the 70% and tried to trigger a melt up, which is another signal to further selling to come in the coming days. So definitely eyes on NVIDIA for further weakness. If you see the market is red, go to NVIDIA. Especially now with the trend changing, NVIDIA is going to sell off in the 3 to 4 to 5% range in the coming days. So definitely keep your eyes out on this. The next stock we look at is Meta. Meta is trading inside of this bullish channel. However, it is trading at the very, very top of the channel resistance, retesting resistance 3 times, clearly failing it. And yesterday, and you can tell, the way we have been going up from this super overbought range, from 88 all the way up to 215, we have been trading with very small candles in the last couple of days. And what that signifies to us is that volume is slowing down. Demand on the buy side is decreasing significantly due to the basic laws of supply and demand, where the higher the price is, the lesser the demand. So, or the higher the supply is. So, what we believe will happen from here is that Meta will end up coming back down below the 20 EMA line at 202. Then it'll break 194 and possibly retest 183 area. And I believe even after filling this gap at 181, I think it isn't going to be enough. I believe there's plenty of room to the downside on Meta towards 153, where it will bottom out from there. So whatever catalyst takes this stock down to the 153 area, I would be watching it. But I would also say that when we do come back to the 181 area, if I am shorting here, which I am, right, I'm going to take out majority of my positions right here at the gap fill at 180. This is because by then the 200 SMA line will have come up, and I will also try to see if Meta is going to hold this bullish channel support at 180 area and potentially move back up towards basically go back up towards 223, and then finally break that major resistance at 223 and head towards the upper resistance line of this bullish channel is trading in at 254 area. But in the meantime, we will be anticipating a gap fill at 180 on Meta for the next 2 to 5 weeks. This is a $30 drop on Meta, you guys. Do not miss this move. All right, so that is going to be all for today's recap. Thank you all for watching this, and I'm going to get off from here. Are there any questions, team? My mic was on, right? Thank God, yes. So, no questions. I will see you all in tomorrow's trading session, everyone. I hope you all have a wonderful day.